Let's be honest, trying to make sense of the housing market these days can feel, well, pretty much impossible. It's just a swirl of mixed signals and a whole lot of uncertainty. So what we're going to do is dive right in and try to figure out what is really going on as we head into this spring home buying season.
You know, this quote from Tom Malone over at Vitality, it just absolutely nails the feeling right now. The market isn't crashing, but it's not taking off either. It's just stuck. And that's exactly what we're going to break down here. Why?
Okay, so here's our game plan. We'll start with the big picture of this stuck market. Then we're going to look at the wild ride that is the rate roller coaster, the standoff happening between buyers and sellers, untangle the price growth puzzle, and finally, look ahead at what's next.
So what do we even mean when we say a market is stuck in neutral? Well, it's pretty simple. It means everybody, both buyers and sellers, is kind of hesitant. There's just enough going on to keep the engine from stalling out completely, but not nearly enough confidence to actually put it in drive and hit the gas. It's a market in limbo. All right, let's get into the single biggest factor that's putting the brakes on everything: mortgage rates. I mean, they have been on such a wild ride, and that journey is absolutely central to this whole story. And what's so fascinating is the contrast here. If you look at where we were last year, rates are so much better. We're actually near three-year lows, sitting around 6.1%. And that should be amazing news, right? Well, the issue is, after getting better for a while, that progress has kind of stalled out and flattened.
And this quote from Lisa Sturtevant really gets to the heart of it. She's saying it's not just about the number itself, that 6.1%. It's the volatility. It's the constant up and down, the uncertainty of where rates are going to go next. That's what's making people hit pause and just wait on the sidelines.
And, to make things even more confusing, even the experts are kind of split on this. Lisa Sturtevant sees more bumps in the road, maybe even higher rates ahead. But then you have Mike Flatten who thinks they're just going to hang out in that 6 to 6.5% range. So if the pros can't agree, is it any wonder the rest of us feel a little hesitant?
So all this economic data is one thing, but how does it actually affect real people? Folks trying to buy or sell a home. Let's zoom in on the human side of this stalemate. If you look at the really short term, you can see the reaction crystal clear. In a recent week, home purchase applications dropped by 4%. That's a direct, immediate reaction to all that rate uncertainty we were just talking about. People are tapping the brakes.
But, and this is why the market is just so darn confusing, if you zoom out and compare now to the same time last year, applications are actually up a whopping 18%. So what this tells us is that underneath all that short-term jitters, there is still some seriously strong demand from people who want to buy a home.
And this chart really paints that contradictory picture. I mean, at the exact same time, you've got a record number of deals being canceled and pending sales going down, but you've also got new listings starting to creep up for the first time in ages. The market is literally pulling itself in opposite directions.
And all this leads to what people are now calling the buyer-seller impasse. And it is a classic standoff. Buyers, they're looking at affordability and they just can't stretch their budgets to meet the prices sellers feel like they need to get. So what happens? Nobody moves.
And here's what that actually looks like on the ground. A Redfin agent, Connie Journal, says buyers are in no rush at all. They can take their time, they can be super picky. And that means if you're a seller who absolutely has to move, you need to get real about your price. The whole power dynamic has really shifted.
Okay, so let's get to the final piece of this whole puzzle. The home prices themselves. This is really the bottom line when we talk about affordability. Now, you'd think that in a market that's stuck, prices would start to come down, right? But that is not what's happening. Believe it or not, they are still going up. Sure, the pace has slowed way down, but the direction is still north. And look at this. It's not even simple to track that growth. All these different major indices, they all measure prices just a little bit differently. That's why you see reports of price growth anywhere from 0.5% all the way up to over 2.5%. It just goes to show how complex the data really is.
This quote from Adam's CEO really just nails the affordability trap we're in. Yeah, rates coming down a bit gives buyers a little bit of an opening, a little breathing room. But that relief gets eaten up almost immediately because home prices are still sitting at or very near record highs.
So, with all these forces pulling in different directions, what on earth does this all mean for the future? Let's take a look at the outlook as we head into the really critical spring season for 2026.
Now here's a little bit of genuinely good news for you. According to the data, overall housing affordability has actually gotten better for 9 straight months. It's not a huge leap, but it's a slow, steady trend in the right direction, and it's happening almost everywhere.
So the big question is, will that positive trend continue? Well, experts are watching 3 main things that are going to shape the conversation for 2026. First, are wages going to keep growing to help people's buying power? Second, will mortgage rates finally just stay steady and avoid more of this crazy volatility? And third, the big one, what happens with housing supply?
And this all brings us to a really solid, grounded prediction from Mike Flatten. I think he sums up the consensus perfectly. He says, look, expect a spring that's a bit stronger than last year, which is good, but don't go expecting a breakout year. The market's getting better, but it's not about to explode.
Which leaves us right here with the big question. We've got this positive momentum with affordability, we have some stability, finally, and mortgage rates. The pieces seem to be falling into place. But is it going to be enough? Is it enough to break this stalemate and finally shift this market out of neutral and into first gear? Well, that is what we are all going to be watching for this spring.